Hello students, welcome to my YouTube channel Sun Academy. Today we are going to solve a question of capital reduction in financial accounts. As you can see, the question on screen is on 31st of March 21. The balance sheet of Nirbhay Limited is as follows. Under equity and liability, shareholders fund share capital is 7 crore, and under non-current liabilities 8% debentures are 1 crore 50 lakh. Under current liabilities, trade payables 2 crore, other 1 crore 30 lakh. Under the heading of assets and non-current assets, tangible 3 crore 55 lakh, intangible 1 crore 5 lakh. Under current investment are 55 lakh. Under current assets, inventory 1 crore 65 lakh, trade receivable 2 crore, and others 3 crore. Now, notes have been prepared. So, under note 1, share capital 8% cumulative preference shares of 100 each of 2 crore, equity shares of 10 each 5 crore. Other current liabilities shows due debenture interest 6 lakh, directors loan 40 lakh, bank overdraft 84 lakh. Under tangible fixed assets, pre-owned property 2 crore 80 lakh, plant 75 lakh. Under intangible assets, goodwill 70 lakh and patent 35 lakh. While under other current assets, preliminary expenses are 35 lakh and profit and loss account 2 crore 65 lakh. That means it is a loss. Then after it has been said that following scheme for reconstruction was approved and implemented. Preference shares are to be written down to rupees 60, equity shares are to be written down to rupees 3. From 1,417, preference dividend is not paid, 3,4 to be waived, and for the balance, equity shares are to be paid. Debenture outstanding interest is to be paid by cash and to give them freehold property of book value 50 lakh at 75 lakh in part payment. Balance freehold property to be valued at rupees 3 crore. Investment was sold for 91 lakh. Directors will accept 80% of equity shares, 10% cash, and balance waived for the loan. Intangible and fictitious assets are to be written off. Balance of reduction account is to be utilized to write off stock and plant, pass entries and prepare balance sheet. Now, as you can see, for calculation, one side has been taken as capital reduction. That means whatever amount will be reduced from the liability side will be written here, and whatever amount will be reduced from the asset side will be written on the utilized side. First, it has been said that preference shares are to be written down to rupees 60. That means 40 rupees will be written down for preference shares. And how much numbers are the preference shares are 2 lakh. On 2 lakh preference shares, ₹40 are to be written out. So 80 lakh will be reduced from preference share capital. Then after ₹7 on equity share capital. Equity shares are 50 lakh. So as per ₹7, that will be 3 crore. 3 crore 50 lakh will be reduced of equity share capital. Now, first we will write a journal for this. 8% preference share capital account debit 80 lakh, equity share capital account debit 3 crore 50 lakh to capital reduction account 4 crore 30 lakh, being rupees 40 on preference shares and rupees 7 on equity shares were reduced. Then after it is from 1/4/17 preference dividend has not been paid. So that means when from 1/4/17 will end on 31st March 18. That means 1/4/18, 19, 20 and balance sheet is of 21, 18, 19, 20, 21 for 4 years. You will have to calculate dividend on preference shares. So on 2 crore at what is the percentage? 8% for 4 years. That will be 64 lakh. Now it has been said that how much they waived. 3/4 they have waived and 1/4 is to be paid. So that will be 16 lakh. It will be written on utilized side. Journal for this will be capital reduction account debit 16 lakh to preference dividend account. Being preference dividend calculated. Now this dividend is to be paid in the form of equity shares. So preference dividend account debit 16 lakh to equity share capital account. Being preference dividend paid. Then after comes debenture outstanding interest is to be paid in cash. And what is the amount of outstanding debenture interest? That is 6 lakh. Outstanding debenture interest account debit 6 lakh to cash bank account being debenture interest paid. Now you see I have been writing all these words in short form, but it will be better for you to write full forms and also write draw journal very properly. Then after it is to give them a freehold property of book value 50 lakh at 75 lakh. Debenture holders are to be given freehold property of 50 lakh at 75 lakh. That means company will be benefited of 25 lakh. That will be written on reduction side. Debenture holders. Entry will be written, debentures of 75 lakh will be cleared. What is the percentage of debenture? That is 8% debentures account. ₹75 lakh to freehold property account 50 lakh to capital reduction account 25 lakh. Being debentures of 75 lakh cleared or paid off. Then after it has been said that the remaining freehold property is to be valued at 3 crore. Now freehold property was valued 2 crore 80 lakh, out of which freehold property of 50 lakh has been allotted to debenture holders. So freehold property of 2 crore 30 lakh will be remain, which is revalued at 3 crore. So 70 lakh will be the appreciation value. Appreciation value or revaluation value. So entry for that will be freehold property accounts debits 70 lakh to capital reduction account. Being freehold property revalued. Then after his investment were sold at 91 lakh. So bank account debit 91 lakh to investment account. What was the value of investment? That was 55 lakh. Now difference between this will be the profit, so that will be 91 minus 55, 36 lakh to capital reduction account. Being investment were or was, you can see, we don't know how much investment or what was the investment. So that will be written on reduction side. This is not account, this is only calculation or working note, you may say, because if you maintain account, that will be written on credit side. Then after is directors will accept 80% equity shares, 10% cash and balance waived for their loan. Now what was the directors loan? That was 40 lakh. Directors loan account will be debited 40 lakh to equity share capital account 32 lakh to cash account 4 lakh and to capital reduction account 4 lakh. Being directors loan was paid. Next adjustment is intangible and fictitious assets are to be written off. That will be written on the utilized side. First it is goodwill, 70 lakh, patent 35 lakh, preliminary expenses, those are also 35 lakh, and profit and loss account, that is 2 crore 65 lakh. Now journal for that will be written as let make the space for this journal, and even for next entry. Here capital reduction account will be debited to goodwill account 70 lakh, to patent account 35 lakh, to preliminary expense account 35 lakh, and to P&L account 2 crore, 2 crore, 3 crore, 4 crore, 4 crore 5 lakh. That will be the amount to be debited to capital reduction account. Being fictitious assets and intangible assets written. Now you see 4 lakh which were benefit to the company from director's loan will be written on reduction side, director's loan. Always be careful whenever you write the entry, before that or after that immediately write the figure. If you forget, then there will may be problem. Now it has been said that the balance amount of the utilization is to be taken to write off stock and plant. Now let's calculate what is the difference between the total of these two figures. Here first figure is 80 lakh, then after 3 crore 50 lakh, then after is 25 lakh and 70 lakh 95 lakh and 40 lakh. So that is 5 crore 65 lakh. Now out of which this was 4 crore 5 lakh, 4 crore 5 lakh. Here 1 0 was kept extra. Now 5 crore 65 lakh minus 4 crore 5 lakh and 16 lakh. 5 crore 65 lakh minus 16 lakh minus 4 crore. So 1 crore 44 lakh is to be written from this total. If you subtract these four figures, the balance will remain 1 crore 44 lakh, which is to be used to write up the value of stock and plant. And what the ratio will be taken? The book value of plant and stock. Inventory is 1 crore 65 lakh. Inventory is 1 crore 65 lakh and value of plant is 75 lakh. So 15 5 ja 15 11 ja 1 crore 44 lakh is to be written off in the ratio of 11:5. So 99 lakh will be written of inventory, while remaining 45 lakh of plant. So capital reduction account debit, that will be 1 crore 44 lakh to plant account, that was 45 lakh, and to inventory account 90. Being plant and inventory were reduced, or the value of the plant and inventory was reduced. Now we have to prepare balance sheet, but before that let me write the value of plant and inventory. 45 lakh and 90. So total of this will be 5 crore 65 lakh. Now we will prepare the balance sheet. Now if we start to prepare balance sheet, first comes share capital. Now first was 8% preference share capital, that were 2 crore, out of which how much was reduced? 80 lakh. So 1 crore 20 lakh will be the preference share capital amount. Then after comes equity share capital. 3 crore 50 lakh were reduced out of equity share capital. On 50 lakh shares, 7 rupees were reduced. So remains 1 crore 50 lakh. But 16 lakh preference dividend was given as equity share capital. 1 crore 15 lakh plus 16 lakh. let me show you for equity share capital. Total was 5 crore minus reduced 3 crore 50 lakhs, so remains 150. Then after preference dividend was given as equity share capital 16 lakh. Then after directors were given for loan as 32 lakh. So 1 crore 50 lakh plus 48 lakh. 1 crore 98 lakh will be the plus 1 crore 20 lakh. 3 crore 18 lakh will be the share capital. There wasn't any reserve surpluses, and then after comes debentures. Debentures were cleared of 75 lakh, right? Debentures were of 1 crore 50 lakh, out of which 75 lakh were reduced. So 8% debentures will be 75 lakh. Then after comes the number of current liabilities. Trade payables were as it is. Nothing was done to this. That were 2 crore. Then after there were other current liabilities that included due debenture interest which was paid, director's loan which was cleared, bank overdraft 84 lakh that was not paid, so BOD which included others 84 lakh. Then comes tangible fixed assets. Freehold property was revalued at 3 crore. And other freehold property was, fixed tangible asset was plant. Value of plant was 75 lakh, out of which 45 lakh was returned. So plant will remain 30 lakh and total will be 3 crore 30 lakh. So 3 crore 30 lakh will be tangible. Intangible assets were written off. Investment was also sold. Inventory $165, out of which 99 lakh were written off. So inventory remains 66 lakh. Trade receivables as it is. and that is 2 crore. Others, what others included? Preliminary expenses and profit and loss account, that was written off. But here cash account is to be prepared. In the original balance sheet there wasn't any cash, but when it came to first, there was debenture interest was paid in cash, that was 6 lakh by debenture interest, 6 lakh. Investment were sold for 91 lakh to investment account. Four lakh was paid to director's loan as cash. So 6 and 4, 10. Balance will be 81 lakh. Cash and cash equivalent. Now we have to tally liability and assets. 3 crore 18 lakh plus 275 lakh, 2 crore 84 lakh, that is 6 crore 70. Now when we come to assets, 3 crore 30 lakh, 66 lakh, 2 crore and 80, 6 crore 70, 7 lakh. In this way you will receive the final balance sheet, but before that you have to write one important thing: balance sheet and reduced is to be written compulsory on the head of the balance sheet, otherwise your 1 mark will be subtracted. Now if you want to learn these kind of hard, interesting questions, do follow my channel, because if you practice these kind of hard sums, the sums of books will be very easy for you. And one more thing, don't be afraid of study, because study is always very easy if you have a proper planning, if you are studying with very good planning and your mentor is very nice to teach you how to study. So never get afraid. Do follow my channel, share link of my channel, and do comment.